to the ACH, to the ACH operator. The ACH operator is the Federal Reserve or the clearinghouse. There are two operators in the United States, the clearinghouse or the ACH or the Federal Reserve. The Federal Reserve then parses that data and sends it to the appropriate receiving depository financial institution. In other words, the bank of the student or the parent. Now that that bank has received the file or received the transaction, they know that they need to take $100 out of Sally's account, 1234. Is there enough money in the account? Yes, we'll deduct the money from the receiver's account, and the money is then funded back to the ODFI and to the originator. Okay. And that's the ACH process, from the receiver to the originator, from the originator to the ODFI to the operator, operator to the RDFI, and then the RDFI affects or deducts, and in some cases could add money to the receiver's account. If this were a payroll example, nearly everything on this screen would be the same except where it says student or parent paying tuition, it would say employee receiving pay. They would still be the receiver. Okay. Hope that makes sense. Yeah.
It does. Terry, let's roll on to the next one, and I'll tie her in here. So, so this is, so basically every ACH transaction here carries a cybersecurity footprint, not just a financial one. So when we talk about Nacha and ACH compliance, it's easy to think in terms of transactions, but what's really being exchanged is sensitive data, right? And that's why we have to secure it. And that's why a lot of these risk and protection mechanisms are in place. Every time an account number or routing number moves across the systems, there's a point of vulnerability, right? And for higher ed, it's a major concern. So the average cost of data breaches in our sector right now is about 3.7 million. And of course, that's just dollars. It's hard to really quantify what the effect of your brand and reputation is, especially in a situation like in higher education, where once you graduate, you're a part of that community for life, right? And so some of the value of the lifetime value of these interactions is hard to quantify. And also ransom attacks on universities and these kinds of are up 70% year over year. So we've seen that some of these higher education groups and cyber attacks on campuses are getting like thousands and thousands of attacks every week. So, I don't know if it's just because the surface attack area is so big, or you've got a lot of smart students wanting to earn their stripes by hacking the campus network. I don't know, but it is certainly an area that I think we're sure we don't have to tell any of you is an area that needs to be protected. So that's why not just compliance isn't just about moving money correctly. It's about protecting identities, payroll accounts, tuitions, refunds, donor information. So every ACH rule has, most of the rules, at least the ones we focus on, will have a cybersecurity intent behind them, whether it's fraud monitoring or data encryption. So it's just pushing us all towards, stronger accountability, transparency, and protection. So Ruth, why don't you talk to us about some of the new programs here? I know everyone's heard of safe payments, fast payments with TCH and the Fed, but we'll talk about some of the advantages here.
Yeah, and let me start by highlighting. Actually, let me start by talking about a bank robber. And I looked up his name because I couldn't remember it. Willie Sutton. Willie Sutton was a bank robber, and when he was finally caught, they asked him, "Why do you rob banks?" And he said, "Because that's where the money is." Right? Well, think about your when we talk about ACH, we're talking about your bank account. We're talking about your bank account, your routing number. That's where your money is. If someone were to compromise, steal, or, do bad things with your credit card, that's not where your money is. You might pay your credit card out of your bank account, but your credit card doesn't necessarily have direct access to the funds in your account. So if you're a bank robber, if you're Willie Sutton, you're likely going for where the money is, your bank account. And so a lot of what Nacha does is help make sure that the network that is being used, the rules, and all of the participants follow all of the rules, that the rules are there to help secure everything. As the threats increase, as the volume of ACH transactions shift, and I talked about business transactions earlier, as those increase, what did we see in the last probably 5 or 6 years, from a threat fraud increase in terms of ACH, but business email compromise increase, right? People trying to skim bank account numbers and use them. We see a lot of testing of account numbers to find out whether it's a valid account number so they can defraud it in some way. And so as the Nacha rules evolve to the needs and the threats that are going on within the payments community, we start seeing more rules like I'm going to talk about here in a little bit. There, fraud reduction is extremely important. Education, and we've mentioned it earlier, I don't see it on this slide, but education is super important. That's why we're here today, to help you understand not only what opportunities are available to you to help conduct ACH transactions, whether they're consumer or business related, but to secure those transactions and to make sure you're well positioned for the future and for the threats that we know are here today and that will increase in the future. And I think that's a lot of what Nacha spends a lot of time on is, understanding the threats, evolving the compliance and the recommendations for security in a manner that the entire network can support and move forward together with. So it's not a bank fighting against a consumer or a business fighting against a receiving bank. Everybody works together to get it done.
Yeah, I've always find it interesting when folks talk about credit card processing in one lane, and then oh, now we're talking about ACH processing. When the truth is that every credit card transaction that gets processed today, authorized today, or money held on the accounts will be communicated bank to bank through over Nacha networks and ACH files tonight, because that's how the settlements are cleared.
Right.
So it's so funny how inextricably intertwined, even credit card processing is layered over the rails, the Nacha rails. So, Terry, let's go on to onto that next screen there. So, I mean, in that same way, that it touches everything, even payment cards, credit cards, but it's also, vastly across our campuses. It's a circulatory sort of, lifeblood system. It's touching, your everything we talked about: student refunds, financial aid, vendors, contractors. We've talked to some universities that have thousands of contractors, that perform every different thing you can think of for the universities. Lots of vendors, reconciliation. Um, so it's certainly important, and it's certainly let's go to the next slide, too, Terry. It's certainly something that is just wired into to pretty much everything you can think of. Even if you're not you know buying that athletic ticket, well, you might be buying. What if you bought a bunch of tickets? Or what about dining plans or housing or hospital, right? Or getting on a plan for books, other campus services. Or booster payments, donations, donors, alumni, fundraising, development, as it's called. So, it just really is. It's in there and everywhere. And one of the things that we have noticed as we've worked with some universities is that well, they don't just have one way that they're doing it. They may have different software across different departments. There may have one might be a bank-centric tool that they're using to upload Nacha files. One might be baked into software for payroll that's sending it in. But in all cases, there's definitely more than a couple, maybe even more than a handful of different ways universities are taking in and sending out and storing data. It might be stored in a database that's generating a file. Well, oh my goodness, shouldn't that data be tokenized or protected in that database before the file is generated or before it's communicated out? The answer is yes. We don't want replay or substitution attacks, et cetera. So very, very important. I think really the point of these two slides is really to say, hey, look, make sure everybody take a step back at some point and think about the fact that it might be in various departments, not just one. And sometimes the ACH transactions might be happening, but all so much inside of software from a vendor that you have that you might not see. Oh, wait, it's still actually on my campus, even though it's in someone else's software, or it might be being manually uploaded, et cetera. So just wanted to do that. And then kind of just to set the level that, this is everywhere. And then kind of let's get into sort of the meat of our discussion here and talking about some of these new rule amendments that have come out in order to, shore up the cybersecurity of Nacha across your network.
Great. Let me address a question that's just come in. I'm going to quasi address this, and then if I don't quite get it answered for you, expand your question a little bit. But the question is, what are the requirements to protect not only ACH data, but what about associated PII, so personal information, right? Data. Um, protected. Oh, I'm sorry. You guys know what PII stands for. It just
Personally
escaped me.
identifiable information. There you go.
Thank you, sir. I
Only
appreciate
because I
that.
say it all day long.
Right, there it is. He just came from a board meeting. He had to say it 5 times to
Right,
get in the room, I
exactly.
think. So yeah. So so ACH rules and guidelines are easily accessible, and I'm going to talk about some of the data security requirements that are coming forward and some that are already existing today and how they apply to you. When it comes to the personally identifiable information, a lot of that is governed by how it's being received and why it's being received, what state you're in, what your school's data security requirements are, and other factors similar to that, right? So if it's personally identifiable student information, you have the FERPA laws that apply. If it's also personally identifiable information that travels along with health information, now you've got HIPAA rules and guidelines that apply as well. So it would be nice to say, here's the book of everything you need to know to secure your payment and all the PII information that follows with it. But it's not that simple. You have to look at each one individually and then look at your state rules and laws as well. Okay. So let's go ahead and jump into the ACH fraud monitoring rule. And I'll talk a little bit about this. This rule comes into effect in March of 2026. The fraud monitoring rule is part of Nacha's initiative to combat credit push fraud. It's really part of their anti-fraud initiative on payments, and we'll see that kind of language later on in one of the other slides as well. As payments evolve, so do the threats. You must always know that. Just because a new payment method has come along or because a payment process is faster, it does not mean that it is more safe. It does not mean that it is more secure. It just means that the risks have changed, and Nacha recognizes that. And so one of the risks with ACH credit entries, for example, this would be someone giving you, a business or a person giving you their bank account information, and you're pushing money to them. Now, down the road, they need to change their bank account information. How do you know they've changed it correctly? What rules and processes do you have in place to make sure you're monitoring for fraud activity? So the rule requires ACH originators, you, as universities, or any third parties that you hire, third party service providers or third party senders. Sorry, I've got an extra dash in there. And ODFIs with 6 million or more transactions annually to implement risk-based fraud monitoring processes. All right. Well, that rule goes into effect March 20th of 2026. I can, with certainty, guarantee that no one on this call is initiating 6 million or more ACH transactions a year in higher education. You're not doing it. Most of you are well below the 2 million ACH transaction a year mark, based on my estimate. Some of you may be a little higher, but you wouldn't be anywhere near 6 million. So the March 2026 date does not apply to you. It does apply on June 22nd of 2026. So the rule requires you to implement risk-based fraud monitoring processes. Let's talk a little bit about more on the next slide as to what that entails. So from the risk perspective, you face risks from payroll fraud, student refund scams, and vendor impersonation attacks, right? Many of your institutions have already suffered from payroll fraud attacks this year and last year. I've heard a lot more chatter this year from the institutions that I'm in touch with about payroll fraud, where you have a system, the employees have to log in. Maybe they even have to authenticate with a Duo or some sort of other token, right, in order to change their bank account information. The bad individuals, the fraudsters, are finding ways around these. They steal part of the credential, and you're pushed the token to authorize, and you just keep getting pushed the token, and finally you just get tired of getting this push because you didn't do it, you don't know what it is, and finally you just authorize it. It's called I just got away from me. Token fatigue or something like that, right? And so you're just like, fine, just do it. And next thing you know, you're not getting your pay anymore. Hopefully you notice it. I have had conversations with universities that have said that this employee didn't get their pay for 8 months and they're just now telling us. I can't operate that way. I don't know if anyone else can, but I can't operate that way. But so payroll fraud is one of these things that as technology evolves, so does the technology that the fraudsters use. And they're figuring out ways through social engineering now to try and scam people out of their bank account information, their logins, their passwords, and even authorizing token pushes. Okay. So the benefits of adopting this rule now rather than waiting to June of 2026 is it's proactive. It's proactive risk management. The the I've got two pictures on the screen here. One is a windy road and one is a straight road. If the distance were the same, 1 mile, would you get there quicker on the straight road or the windy road? Probably the straight road. That's the path the fraudsters will take, the path of least resistance, not the scenic path. They're going to take the path of least resistance. And as soon as they get your money, it's likely gone. There's no turning back, right? So proactive risk management, very important. The sooner, the better your fraud tools, the better chance you have of identifying the fraud more quickly. And the sooner you have, the better the chance, excuse me, you have of getting the money back. So improved fund recovery certainly helps protect your reputation. Best practices in payment transactions are best practices, and they're used throughout the world because they work. Maybe they're not rules, but they are best practices. And so whenever you have guidelines, procedures, and policies that actively monitor or routinely monitor your environment and adapt to the changes and the threats, the better you are. Okay. And of course, all of that helps get good, clean audits for you and good compliance reports. Okay. So this slide, and you'll see this language again, from understanding to execution. So some things you need to know about the ACH fraud monitoring rule. It requires that institutions implement documented, risk-based processes to detect fraudulent ACH entries. Monitoring, and this is from the ACH network language or the rules language, monitoring should include velocity checks, anomaly detection, and behavioral tolerances. This is language that I typically hear from financial institutions when they talk about risk monitoring, or from larger companies that do a lot of transactional processes, velocity checks, anomaly detection, behavioral tolerances. Don't get buried in this language. What you're looking for are, and I'm going to use the word anomalies. What? That seems weird. Well, then stop and look at it more closely. Somebody contacts you by email to make a change to their bank account information, that's outside of process, that's outside of procedure. I don't care if it looks like it's coming from the president of the university or, King Tut. It doesn't make any difference. That's out of the norm. Let me step back a little bit and look a little more closely at this. Anytime you see more volume that's unanticipated, there could be some fraud going on there. And of course, behavioral tolerances. Did you suddenly get a whole bunch of, for example, student information from 2 to 3 o'clock in the morning to update 100 student accounts? Do you normally get that at that time in the morning? That's not normal behavior. Something's happened there. So it's anomalies that you're looking for, right? What doesn't look normal to you? Monitoring of ACH fraud or fraud activity, potential fraud activity, should be continuous. It's not, we do it on January 15th every year. No, you should do it every day, right? And then one of the things that Nacha wanted to call attention to here is micro entries. So let me explain just for a hot second what a micro entry is. Let me do this from a consumer's perspective. I have AT&T is my cell phone service provider. When I first went to AT&T and set up my account, I had to give them my bank account information so they could charge my bank account the monthly service fee that they charge. They wanted with confidence to know that I gave them a good bank account. And so they pushed $1.22 or something to my bank account as a credit. They deposited $1.22 to my bank account. And then I needed to get back to them and say, on, you know, January 12th, you put $1.22 in my bank account. They then say, yep, we agree. So they're good, I'm good, and they can start debiting my account. That's called a micro entry. Now, the micro entry rules have changed a little bit. You can no longer just push a credit. Actually, you can push a credit. You cannot push a debit without pushing a credit to go with it. So some businesses would say, I'm going to push a 20-cent debit to your account to make sure that I can debit your account. Today's rules require that when you push that 20-cent debit, you also have to push a 20-cent credit. You can't just take 20 cents from somebody and say, okay, good, I know you're a legit account now. Okay, so, and I'm not going to talk anymore about the micro entries, but that's what micro is. Actually, I am going to talk one more sentence about it. Where do you see micro entries in higher education? Look on your primary incoming bank account where you receive wires or ACHs. Do you see every now and then PayPal, $5.10, micro, right? Or and that's $5 is a little high, something under $2, or AT&T or somebody else, right? Could be Venmo, could be anything where you see these credits coming in. That should be an indicator to you that somebody not in your treasury group, not managing your bank accounts, has gotten your bank account and is testing it for something. So either a faculty member, a student, somebody on staff, somebody that just meant well but didn't understand the processes has tried to set up a process and given your bank account number out. If there's any way you can figure out what that is, you can certainly keep the money. You could return the money if you wanted to, but you could certainly keep the money. But if you can find out who sent it or why it was sent, then you can start digging into, was this fraud related or is this a well-meaning employee that just got off on a wrong track? So those are micro entries. For the ACH fraud monitoring rule, what you want to do is create and maintain written ACH and fraud policies. You have, each of you in your institutions have a data retention policy, for example. Does your data retention policy include ACH data that is no longer actively being used? It should. And that would be part of your ACH policy, your fraud policy, and or your retention policy. You want to conduct ACH risk assessments. You don't have to have a certain certification or degree or blessing from the Federal Reserve to do your own ACH risk assessment. You can do it yourself. You need to know the rules that you're required to follow. Your financial institution should be able to help you with that. But then also being able to help you with that are, entities like Campus Guard who can help you with an ACH risk assessment. So um, first things first, make sure you have your policies, make sure you have them written. Then go and look. Is what you're doing following policy or is it outside of policy? Where are the exceptions and how do you have those documented? Conduct regular audits, train your people every year, remind them what ACH is, where the fraud happens. Remember, fraud happens quickly in today's world of electronic payments. Make sure they're trained, make sure they understand the policies, make sure your policies and procedures are updated. Rustin talked a little bit about financial data in a database. Well, what about in backups or storage, right? Because it sits there too. Is it locked up in your primary database, but free and clear in your backup or your backup? Make sure you look everywhere that you have bank account information and document where it is. And again, this is proactive documentation to say that we are monitoring potential fraud activity. We have policies and procedures that guide us, and these are the steps that we take. This is what this rule is requiring you to do. And then finally, as I've listed on the last bullet here, collaborate with your trusted partners like Bluefin and Campus Guard for compliance support. You have questions, come to a source that you trust, whether that's your financial institution that provides you the ability to do the ACH transactions or a third party like us or any of the ones that help with your tuition, for example. See if they can help, and then we'll guide you. We won't leave you in the dark. It's everyone's best interest in the ACH network that we all work together to help reduce fraud. I'm gonna pause for a second. Any other question?
It looks like one of the questions in the queue is set up this slide perfectly. It was, in order to protect my institution, should I be encrypting and slash tokenizing ACH data to be compliant?
Right? great question. So that applies to this rule. This is not a new rule. This rule went into effect in June of 2021, but it seems so similar to me from a control protection perspective that I wanted to bring it in here because the rule that we just talked about, the fraud monitoring, and this one work together to help make the network secure. So the supplementing data security requirements rule mandates that certain, and I'll talk about which ones, certain ACH participants must render deposit account information unreadable when stored electronically. This is very, very similar language to what you see with PCI, right? You cannot store plain text cardholder data. It has to be rendered unreadable, whether you tokenize it, whatever. Um, I lost all my terms here. Tokenize it, hash it, mix mash it, whatever. You just can't read it electronically, right? This rule applies to the originators, third-party service providers, and third-party senders whose ACH volume exceeds 2 million transactions annually. Once again, I'm hard pressed to think of perhaps only 2 universities in the United States that may have more than 2 million annual ACH transactions in or out. These aren't ones you're receiving, these are ones you're originating, right? So I'm hard pressed to think of that. And so universities don't tend to fall under this rule because you don't hit that 2 million mark. But again, I go back to the slide with the curvy road and the straight road. If I'm the fraudster and I'm attacking AT&T and I know that they've got 5 million transactions annually, they also have to secure this. They might have more IT security, they might have more money to throw at it. I might be able to get more information. I'm going down a windy road, a lot of mites in there, or I can go right to a university that has 1 million transactions, 1 million bank account information files in their system. It's not encrypted because they're not required to encrypt it. If I can just get in there, it's a straight line path. I get my information and I'm out.
Yikes.
So once the 2 million mark is surpassed, the requirement remains in effect. So once you pass that line, there's no going back. Okay. So if you're an entity that hit 2 million, your financial institution will reach out to you and say, you've now exceeded 2 million, you've hit or exceeded 2 million transactions in any single year. From now on going forward, you must now render your stored deposit account information unreadable when it's in its electronic format. Okay. So why adopt the rule if originating under 2 million, right? Why should you even do it? Well, again, the benefits of doing that is protecting the student data, the donor data, your financial, your bank account data, your staff's financial data, their payroll information. Again, it demonstrates proactive risk management. If you can show that you have a plan, but that the fraudsters got around it, the penalties could be less. And I'm not suggesting that you focus on what penalties are, because penalties they could be anything from reputational damage to students not going to school there anymore, to donors not donating because they don't have confidence in your ability to protect their financial data, their personal information. Could be anything. And that really gets into the reputational risks as well. There's a couple different ways that this rendering unreadable can occur. You can do that by encryption, tokenization, truncation, destruction, secure hosting by a financial institution, very specifically a financial institution, not necessarily a third party that is not a financial institution. Third parties that are not financial institutions are obligated to follow this rule as well. So highly likely that they're over 2 million in transactions and they would have to secure this data. Financial institutions are a little bit different. It's their data, right? It's the bank account numbers that they own that they've given out to their clients. So it's rather difficult for a financial institution to encrypt and truncate data that it's operating with in order to make its clients work. And so that's why you could have your this ACH financial data hosted by a financial institution, and that meets the requirement of rendering unreadable, as long as you do not also have that data in your system in a readable fashion. Okay.
Ruth, I know
Yeah.
when we were talking about this over the last week or so, I had mentioned, that for some organizations, especially over in the card world, The risk here is exposure is as big as your brand is. So if your brand is that big, then a breach is that big for you as well. And you had mentioned, I'll let you repeat it. You'd mentioned how universities. Well, go ahead. Do you remember what we were talking about? I don't want to take it away.
Okay, give me a minute. Give me
Oh
another
yeah,
carrot.
well, okay. I'll rephrase. I like the way you said it. You said that no one's gonna go to the news and say, "Oh well, such and such university had a breach," but read a few notes down. Oh, but they weren't required to be compliant. So, oh, I guess
So
that's okay
it's
then. Move on to
okay.
the next
Yeah.
article. It's like,
Yeah.
no,
No, it doesn't work that way.
it
Yeah,
doesn't
it
work
doesn't
that
work
way.
that way. It doesn't. Yeah.
So,
Good.
anyways, I like that.
Thank you for bringing that up. Appreciate it. I see some questions in. Let me push on because I may be able to answer some of these as we come along, but we'll come back and pick them up. Okay. So on the supplementing data security requirements rule, remember, this is the rule that, in my opinion, likely doesn't apply to the majority of you, but that I'm encouraging you to consider adopting, okay, to keep your data safe and to the data of the individuals who have entrusted you with that data. So some things to know. Data, which what we're talking about here is your deposit account information, must be rendered unreadable when stored electronically. This isn't all on you. Security is a shared responsibility. I don't care where you are. If you're driving down the road, safety and security is a shared responsibility of everybody on the road. The first thing you have to do is keep yourself safe when you get in the car, right? So you get in the car and you put your seatbelt on. Did it click? Did the seatbelt click? We're all kind of conditioned to hear whether the seatbelt clicked or not. If it didn't click, your seatbelt's not on. If you have policies and procedures and you don't review them, you haven't clicked your seatbelt. Okay. If payment activity has changed and it's changing every day as more people are going away from checks into electronic, to ACH, to same day ACH, to real-time payments. If you don't keep reviewing what you have and working with your third parties, be that your financial institution, your ODFI, or any entity that you're working with to help you keep this information safe and secure, then you're missing you're missing the boat and you're bearing the enormous weight of the entire burden on yourself, and you can't solve all those problems by yourself. Security, especially in the ACH network, is a shared responsibility. So coordinate with your banks and your vendors. Make sure you know what you need to do. So some things to consider here, things to do. Again, maintain written ACH policies that define the roles and responsibilities for ACH origination. Who does what in your office? Those policies should define data protection standards and retention and breach reporting procedures, right? You should conduct regular assessments. Again, you can do these assessments yourself. You can reach out to some trusted third parties, again, like Campus Guard, to help you with those assessments. This is one of the questions that come in. Are any schools doing a NACHA audit annually on themselves? And is there any formalized framework that could be shared? I don't have the answer to that. I'm not sure what schools are doing, and there's some links at the end of the slide here that will take you to some Campus Guard pages that can give you some guidance on the ACH assessment. Please don't freak out over this. You don't have to have an assessment. You're not over the 2 million mark. Is it a good best practice? Yes. A one-time assessment to help lay out the land of what you have and help you clearly see where you're doing things, how you're taking ACH, how you're updating records, how you're making ACH payments, and all of the players involved. That first assessment to lay that framework for you is extremely valuable. And then years going forward, you just add to that. What changed? What do we need to update? Okay. So again, audits, training are recommended, and then support from your trusted partners. Okay. All right. Now, that last rule we just talked about went into effect 4 years ago. This one goes into effect in March of next year. This one's getting a lot of conversation, especially in the higher ed environment. I think I've got a handle on it. If you have questions, I'll do my best to answer them, but I'm still having some discussions with NACHA, and I will be actually meeting with them next week on another matter, but I'm bringing this up as well with them. So this rule is called the Standard Company Entry Description Rule. It again is part of the risk management initiative to reduce fraud and improve transparency across the network. It requires ACH originators, again, you, to use standardized language in the company entry description field of an ACH transaction. Now we're getting into a little nitty-gritty stuff about ACH files. In an ACH file, you have, quite simply, a header record that says, and this is too simple than what it is, but a header record that says, hey, I am Campus Guard University or Campus Guard the business, and I'm going to send a payment, and I'm sending payments out, and it's going to the money to pay for this is coming out of my bank account, and here's my bank account number, and here's all of the individuals that I'm going to pay. Here's the 10 people that I'm going to pay, and those are called entry lines, detail lines, and those 10 lines don't have your name in them, but they have your bank account information and your routing number and how much you're going to get paid. When payroll files go out, this new rule now requires that if that is a file for payroll purposes, in the company entry description in the header record, it must have in all capital letters the word payroll. The one that says purchase, this is for e-commerce transactions that are coming in over the web for goods that are being sold, not services, which eliminates tuition. So you do not have to have, as I understand it, the word purchase. If a student logs on, gives you their bank account information, and you take the money directly out of their bank account, that is a service that they are paying for, not a good, right? So purchase doesn't have to be in there. Wouldn't hurt if it was in there, but it does not have to be in there, okay? If, however, you're selling books online, books, high pitch K there. If you're selling books online and someone, and you're able to take ACH and verify and do all the other stuff necessary to accept an ACH online for that type of transaction, that is a good. That type of transaction must have the word purchase in the entry, in the company entry description field. Okay. You may need to work with your ACH file originators, and I'll go back to payroll for a minute. You may have a payroll system that generates an ACH file for you. You may have to update that process so that it includes that word payroll in the company entry description field. May I have the next slide, Terry, please? So what this does is it really is intended to help as fraud continues to evolve in the area of direct deposits, so payments out to someone else. A lot of times the party in the ACH network that is in the best place to initially or early identify that fraud has happened is the receiving depository financial institution, the bank to which you're sending the money to. And so by identifying this as payroll, they're able to quickly identify that this is payroll related, and then they can run their anomaly detection tools and programs to see, did we just get 10 payments in that look like payroll for the same bank account? That seems weird. Nobody has 10 jobs. Nobody gets 10 paychecks. That's weird. Let's flag that one, right? And so by identifying it as payroll, you're helping the network, the RDFI in particular, improve its fraud detection abilities. It does support the monitoring tools that are being relied on. It fits right in with a lot of the tools that are being used, and it certainly standardizes the terms used for purchase for web debit entries. Okay. All right, one more slide here. From understanding to execution. So things to know. The payroll descriptors for PPD credits. PPD is another ACH term. It's a payment from a business to a person. If you looked at your payroll direct deposit on your check account statement, your check, what am I saying? Your bank account statement, it probably says PPD in there somewhere. It just means that a business has paid you. So there's the information on that. Again, this does not apply to services or to CCD credits. CCD credits are corporate to corporate payments. These are business to business payments. So if you're making payments out of your, let's say you're doing accounts payable, this does not apply to that. This does not apply to that at all. Those are accounts payable payments. That's different. The purchase description is for web-based initiated debit entries authorized for consumers for online purchases of goods. Okay. All right. Now, where one of the conversations with Nacha has come in is this last bullet that I have on here, that payroll may include contractors expecting payroll-like treatment.
Mm.
So, from my experience in higher education and some of the conversations I've had with your peers, um, uh, it's usually contracted workers are paid through accounts payable. They're not in your payroll system. You're not deducting taxes. You're not reporting it to the IRS as a payroll transaction. It's a 1099 of some sort, maybe, but it's not payroll. You're not doing FICA and all that kind of stuff, right? And so when the when the rule came out, it didn't say this may include contractors. Where this showed up was in an FAQ that Nacha posted, and they commented on contractors. And then this conversation arose with, again, some of your peers about, well, our contractors are over here in accounts payable. Do we have to move them over to payroll? And then how do we move them over the payroll? They're not payroll. We're not going to deduct anything. We're not going to report it. And we don't want them to get their pay early. We want them to get their pay on settlement date. So one of the things that the receiving depository institution will do, once it achieve some sort of confidence that it's likely a legitimate payroll transaction, it may allow the receiver to have access to their payroll funds before settlement date. In other words, before payday, right? And that's the payroll term in that header record helps give them the confidence, in addition to all of their anomaly and fraud detections, that this is likely a legitimate payment. But with contractors, if you're paying through accounts payable, they don't really work for you.
Mm-hmm.
They work for someone else. So you're paying them through accounts payable, and their employer can deal with the payroll and that payroll heading. My suggestion is to consider the contractor language here, but not to make any changes. If your contractor's being paid through your accounts payable side, that's likely where the agreements were drawn and how they expect to be paid. Don't move them unless you talk to them and they expect something different. Okay. All right. So how the rules shape ACH risk management in higher education. Look, it's about having good policies and procedures. It's understanding your volumes. It's understanding the risks that surround you, who your third parties are, that you have, in many instances, decentralized finance operations. You could have multiple bank accounts where incoming money and outgoing money are going. Know what you have. Monitor your systems, have good data security processes where you're able to encrypt and tokenize or truncate, whatever you can do to hide and protect that banking information you want to do. I always like to think of somebody else's bank account information as my own, and I don't want it. I don't want my bank account laying around on my desk anywhere. I don't want it in a file. I don't want to find it in a file cabinet 30 years later, whatever, right? So what are your policies? Review them. What are your procedures? And then ask your third parties for help, whether that's NACHA, one of the ACH regional payment associations in the country, your uh, your trusted third parties, whoever that is. And then again, testing and documentation. Treat compliance like a seatbelt. It only works if you regularly check it. If you don't hear that seatbelt click, it's not going to save your life in an accident. If you don't exercise and review your policies and procedures and train your staff, then when a fraud happens, you're gonna find out you're not as protected as you need to be because you weren't proactive in what you needed to do to review, monitor, and maintain going forward what's there.
Excellent. Thanks so much, Ruth. I know we're getting to the top of the hour here, so I'll go ahead and wrap us up. Everything we've talked about, everything Ruth's talked about, and I've talked about, Nacha Rules, fraud monitoring, data security, compliance, all comes down to, basically two things: visibility and protection. And this is where Campus Guard and Bluefin come together for you. Campus Guard focuses on assessment and governance, and please take advantage of what Ruth offered, is to provide that assessment to kind of find out where you're at so that you can build on that, identify policy gaps, third-party compliance, ensure your risk, insurance against risk, make sure you're within the Nacha expectations. With Bluefin, as you know, many of you work with us, our Shield Connects platform. We've got the P2PE platform. You know, we protect student IDs, SSNs, bank details, PHI, PII, PCI, ACH, all the different payments and account data. And one of our newer products, FileGuard. So if you see the Assess, Secure, and Store, and this is something that we built that I think has a special place within higher education, and that is that this is a way for you to encrypt those Nacha data in your databases or in your files with routing numbers and account numbers that look just like real ones, but they're actually not, right? They're tokens that can fit in legacy systems. And then as that data is being transmitted to the bank, transmitted through the software, as it's going through our system will go through and revalue all those and put the right data in there. So that way you don't have to have all this sensitive data sitting in databases and files around your organization. So I'd encourage you all to take a look at that. I mean, the goal is simple here: to make compliance sustainable, not reactive. And I think with the right assessments, technologies, your institution doesn't just need to meet not just requirements, but lead the way in protecting your students, donors, employees, and all of this. So with that, thank you so much, Ruth, and all of you, and I'll hand it over to Danielle to close this out.
Thank you, Rustin and Ruth. This was excellent information. I am answering a question as we speak. Is it possible to get this PowerPoint shared with attendees? Absolutely. You are all going to get a copy of the PowerPoint tomorrow, as well as a recording, or the URL rather, for the recording on demand. No sign up required. That's going to be made open for everybody. Before we depart, I think there's probably two questions, Ruth. I wanted to see if
Yep.
we could talk about, and that's the one from 341 and 343 today.
All right. Let me. So I did the one on 341. Are any schools during the
Yep.
Nacha audit annually? Let me address. If I do not meet the volume thresholds, what exposure do I have in the case of a breach? If you don't meet the volume thresholds, I'm assuming that would also mean that you're not going to then truncate, encrypt, whatnot. So your exposure to fraud, I'm not sure how to put this. Let me say it this way. If you have a front bay window to your house and you have $1,000 worth of cash sitting on the front table, but the front door is locked, there's a scenario. Now you have $1,000 in your house, but it's in a drawer and it can't be seen from the picture window, but your front door is locked. What's your exposure? Which one of those is a greater risk? I think the one that has the cash visibly seen, right? So same thing with your ACH data. If it's easily accessible, if it can be read as soon as it's opened, then your exposure risk is greater.
Yeah, and also, if we're
Yes.
just solely focused on violations, you know, and the fines that are associated with those, right? That's one sort of maybe economic answer. But then there's all the state privacy regulations and rules where this data can get pulled into that. And one of the things that we've seen over time is that organizations that fully comply with industry standards, like not just rules, like PCI's rules, when and if something bad happens, as Ruth pointed to earlier, and that forensic investigation ensues, and they see that you have been doing and following all of the state of the industry, state of the art, the regulations and the requirements, even ones, for example, that might not be technically required of you because of your size, that will go a long way to reducing the fines and the violations, and also helping you weather that storm from that side. So I think it's a no-brainer to have as that at least common denominators to follow the industry standards.
Yeah, great point. And then the last question I see here is, if we have a third-party service provider processing our ACH debits, so student tuition, business invoices, et cetera, what proof should we request that they are complying with these new rules? This is a trust but verify type of situation. Ask them. are you compliant with the ACH, with the Nacha ACH rules? They will say yes. If they then move on to additional stages of interviews or consideration from you, then start digging a little deeper. Do you comply with the web debit rule? Do you comply with the supplemental data security rule? Do you comply with whatever? List the rules out. First, ask the big question, let them answer, and then get into the nitty the next chance you get if they proceed on with considering business from them. And so then if they say yes to all of that, just keep your documentation, because in your agreement with them, it should define whose role is what in the ACH network, what they should be doing, whether they're hosting, whether they have your data, whether they're holding the bank data, whether they're truncating it, whether they're sending the file, whatever their work in the ACH returns, it should all be documented in there. First ask, trust, but then verify.
Okay. Excellent. Well, thank you, Ruth and Rustin. And I want to thank everybody for joining us today. There are resources and downloads that we will be including on the last page of this deck when we send it out. And also stay tuned for more information. We are having another webinar, and this is through the Payments Academy, and it's November 12th, 3 to 4 EST. And this is going to be talking a lot more about kind of what are we seeing in cybersecurity. Okay, so what's going on against higher education? What do these threat vectors look like? What's ransomware doing? So very educational on what is emerging in cyber. Ruth, Rustin, thank you again for your time today. And I hope everybody has a great rest of the day.
Thanks, everybody.
Thank
Bye-bye.
you.
Thank you.